We need to be good at sussing out.
You can do it from any point. Let's collaborate instead of compete.
Hey, everybody. Welcome back to the Mentor Nation podcast. I'm your host, John Abbas, and we have a really great episode for you today with a brilliant investor who's going to share some simple strategies for trading options in the stock market and having success. He's got an insane track record. But before I bring him on, if you are new here or if you haven't subscribed to the podcast yet, do me a favor, make sure you take 2 seconds and do that wherever you're listening, whether it's YouTube or Apple. I just want you to get a notification every time we release a new episode, and we have some really great guests lined up. And I want to make sure that you get a notification every time a new episode releases. So today I have the privilege of bringing on one of the smartest guests I've had a conversation with, especially when it comes to finance. Simon Ree is the author of the best-selling book, The Tao of Trading. He's a master when it comes to helping people make money in options trading specifically. He started his career in the financial markets in 1992, and he held senior positions with Goldman Sachs and Citi-Bank, and he even headed up the markets division for Goldman in Sydney, Australia. And this is what I love about him. After a 28-year career, he decided that it would be far more fulfilling to help everyday people have success than it would be to continue helping wealthy people just get wealthier. He wrote a book that became an international bestseller, and now his company, the Tao of Trading, is exploding because of the results that he has gotten for his clients. And so this is just an incredible episode. I'm excited to have him on and for you to listen to it. Please help me welcome Simon and enjoy the show. All right, we are recording. Simon, thank you so much for being on the Mentor Nation podcast. I'm excited for this interview, and I'm just pumped for you to share some insights today with the listeners. So thank you for being on.
Fantastic, John. Thanks for having me.
Yeah, of course. So for you listeners, Simon is a highly successful options trader and wrote the best-selling book, The Tao of Trading, How to Build Abundant Wealth in Any Market Condition, which I feel there couldn't be a better time ever to learn that skill than right now with crazy market conditions. But Simon, I was hoping today that we could spend a little time talking about your story and then pivot into the markets and the direction the economy is headed, in your opinion, in the short and maybe the medium term. And then I would just really love to dive into, what you do, your book, and how you've helped thousands of people thrive regardless of what the market does. I think so many people put so much fear into, well, my future is based on something out of my control, and you teach people how to regain that control. And I really, really love that. But I just wanted to start with your story. You spent years working with some of the wealthiest people in the world. How did you get your start in finance and just all of that?
Yeah, well, I guess finance, stock market, something I was interested in since I was a teenager in high school. I was in my second last year of high school when the 1987 stock market crash happened. And I didn't have any skin in the game at the time. I was too young, but I found the whole thing fascinating. I had an economics teacher who was very passionate about markets as well. And he really, I guess, ignited my interest. And I thought, you know what? I want to be a stockbroker when I grow up. That was the initial impetus. So I studied economics and finance at university, and it was back in 1996. I started working with Goldman, and my first job out of uni was as a futures broker, and that's sort of where I learned about markets and derivatives and options and that sort of thing. And so then when I joined a more conventional investment bank, I had a strong derivatives background, and that really became the core of how I went about building my business. And within a few years, I got tapped on the shoulder to found and head up the markets desk at Goldman Sachs for Australia and New Zealand. Wow. And in that role, my team and I were responsible for all of the over-the-counter equity derivative transactions, fixed income and credit transactions. So, that gave me a really good background, both in terms of how markets work, how derivatives work, how to price them, how to structure them, but also in how to run a business, well, a business within a business, of course,
Right.
hire and fire people and that type of thing. So that was a role I really enjoyed. Fast forward to 2010, Citibank tapped me on the shoulder, offered me a job in Singapore, and I thought, yeah,
Mm.
why not? Heard a lot about the place. I'd visited a couple of times, really enjoyed it, and fancied doing a stint in Asia. So moved up to Singapore in 2010, which is where I've been on and off ever since.
Wow, that's well, we know you're successful if you live in Singapore. I- it's I can't imagine. I haven't been there since I think '03, so I imagine how expensive it is there.
It
Like
would look
right.
pretty different as well, yeah.
Oh yeah, Dubai, Singapore, all these countries I visited just before their absolute explosions. But that's awesome. So what made you go off on your own?
Yeah, it's a good question. I got to, I guess, middle age and, starting asking those tough questions. What am I doing with my life? What is my marginal contribution to society? And I didn't really like the answers I was coming up with. Essentially, what I
Mm,
was doing was working with incredibly wealthy people and helping them either stay that way or become even wealthier. And, it just didn't feel like I was really moving the needle in the direction I wanted to. And I thought, I've built a skill set here. I understand markets, and I also understand that retail investors do not have a great selection to choose from in terms of products and offerings that A, deliver results, and B, deliver results at a cost-effective price.
right.
So, my first impetus was to kind of get out on my own and just trade my own account. And it was really, I had this seed in the back of my mind. I'd like to help people do it. And it was conversations I had with some mutual friends. They said, look, you should teach what you do, write a book and teach. And, I think you'd really enjoy it. And there's this, some people that they like to come up with the old adage, those that can do, those that can't teach. And that's a quote from a middling playwright who only ever wrote one play that was worth a damn. And coming from a martial arts background, I could see that was absolute rubbish.
Yeah.
The greatest martial arts masters are very often the most wonderful teachers, and that was the sort of, I guess, the DNA I wanted to bring to the trading world.
What martial arts did you do?
So I did a collection. I mean, I started off with judo as a kid. I studied karate. I did studied Western style boxing, Muay
Hmm.
Thai, but it was Jeet Kune Do that really resonated with me, and
Ah,
that's kind of where I went all the way, became an instructor. Yeah.
oh, that's fantastic. Dude, I love Bruce Lee. He is
Oh
my
yeah.
idol. I was a national champion in Taekwondo growing up.
Oh wow.
And then living in Nashville, I didn't have a lot of money growing up, and the coaches in Nashville couldn't get me past there. I always wanted to go to the Olympics, but there's just nobody in Nashville. I would have had to move to another state, and we just couldn't do it. So I kind of like left it there and just shifted into wrestling in high school and other things.
Oh
But
cool.
I loved it, man. That was my whole childhood was martial arts. So
Oh,
cool. So cool.
similar to me. Yeah.
I love that. So I really like what you said, as far as just, you it really resonated. I listened to you say that in another interview, like just making wealthy people wealthier and not getting fulfillment doing that and, wanting to help the little guy. And I really like that you actually made that pivot. And something that I've has always fascinated me because I know a lot of highly successful people, friends of mine, they're so great at doing, but they couldn't for the life of them teach it. They just don't know how they do it, and they don't know how to systemize what they do. Like, how was that process, learning how to teach a newbie what you've spent decades or years and years accumulating? Like, how was that process?
It's a good question. Teaching is something that I've always enjoyed. And this is something that I realized a few years ago when I was learning to kite surf. And look, I'm a terrible kite surfer. All right, I have got no business teaching anybody how to kite surf. But but I realized as I was going through my lessons, I kept asking myself, how would I teach someone else how to do this? How would I explain to someone else what it is I'm doing? And it's something that I've done, I think, throughout my life. Whenever I've taken up a hobby or, martial arts, I became a certified instructor.
Right.
And it's something that I love sharing knowledge. And I just think one of the most rewarding experiences is when you spend time with somebody and you see the light bulb go off. You see that penny drop and it all falls into place. And it's, that it's just a really rewarding experience.
I love
So
that.
I think that this idea of how to teach it, it kind of came naturally to me. It was something that was already in me.
Gotcha.
Maybe like a little hidden talent or or something like that.
Many hidden talents, Jeet Kune Do and trading. So,
Yeah.
so you started teaching. When did you start doing that? When did you start actually teaching people, and when did your
So
book come out?
so I started actually teaching people in 2018. Book
Wow.
came out in 2020.
Oh, fantastic. So it's
Yeah.
relatively recent.
Yeah, it came out during the pandemic.
That's that's a great time to launch the book.
Yeah,
Yeah. So you're obviously, you've built this up. So I want to just ask you a few questions about the markets right now. I listened to you in another
sure.
interview and I really loved your what you said, and just like I think the host had asked you like what do you predict's going to happen in the short term, and I'm curious to your opinion because like I've never seen anything so polarizing. Like I see the logical part, right? I own a couple of companies here in Nashville. The
Hmm.
markets, like stock market going down, real estate has kind of come to a little bit of a halt temporarily, but the job market is still really strong. It's still unbelievably difficult to find people
Mm,
despite, interest rates going up. So, but what blows my mind is how on one side of the coin you have these unbelievable experts that are like, "Oh my god, this is the biggest bubble ever. It's going to burst and we're going to be into like a deep dark depression." And then other experts who are like some of the best, they have a completely different opinion and they're like, "Well,
yeah.
it's still we still could have a soft landing." Like my question is what do you believe is going to happen, and why do you think some of the smartest people in the world can't agree on what's going to happen?
Yeah, okay. That's a really good question, and we probably there's probably a fair bit to unpack here. In
Let's
terms
do
of
it.
where are we? We're in. I've been calling this the screwy cycle because first 2 quarters of this year, the US economy experienced 2 consecutive quarters of negative GDP growth. All right, the economy shrank 2 quarters in a row. Now, ever since 1974, that has been the accepted definition of a
A
recession.
recession.
Now, there's been a lot of people, sort of recession apologists, jumping in saying, "Oh, no, no, it's not really a recession. We're going to change the definition." But it's a long-standing definition. But what was really screwy about this recession that we had earlier in the year was that unemployment rate was 3.5%. Well, the job openings, there was over 2 job openings for every person available to fill them. The gap between the number of job openings and the number of people available to fill the job openings was at historical wide level.
Hmm.
And so it didn't feel like a recession to most people. And so it sort of got apologized away as, oh, it's residue of the pandemic, it's supply chain issues. And look, there's definitely elements of truth to that.
Right.
But there's a lot going on under the surface as well. Um, Inflation is obviously something that is very topical at the moment, and something that we haven't seen for 40 odd years. And the problem with that is that the only people who kind of really remember inflation now have retired. So all the
Right.
people in the markets and making the forecasts were probably at the oldest teenagers during the last inflationary bout, or maybe they just entered the workforce. But if you were 20 years old in 1980, you're kind of in your early 60s now. So
Right.
there may be a few of them still around, but it's the kind of the first-hand memory of inflation has been lost, if you like, by the people writing the reports and writing the research. So it's only if you're a bit of a economic historian and you bother to dig into what actually happened that you'll understand a little bit more what's going on.
Right.
So we've had the Federal Reserve has long been guilty is the wrong word, but there's been this perception, and rightly so, that there's the so-called Fed put. Whenever the stock market falls more than 10% or so, the Federal Reserve sails in to reduce interest rates and provide liquidity.
Right.
And that game has changed this year. And to Powell's credit, he's been very consistent in telling us what he's going to do, and he's done what he said he was going to do. And what's happened is I think people in the markets have been second guessing Powell all year. Oh, the Fed's going to pivot. The Fed's going to pivot. We're going to get a dovish pivot. And
Right.
what people mean by a dovish pivot is the Fed's going to cave on their rate hike plans and suddenly start cutting rates. And it hasn't happened. And Powell's told us it isn't going to happen. And we've had the fastest rate of interest rate increases in over 4 decades. So we had 4 75 basis point rate hikes in a row. We had another 50 basis point hike this week. And the message from Powell at the recent press conference is that they're still not done. That they've still got more work to do to rein inflation in. And what's, I think, been really confusing people is the initial reasons for the inflation shock that we're now in have dissipated. All right, we had supply chain problems that's largely gone now. We had obviously the war in Ukraine and the surge in oil. Well, oil is now down year to date. Commodity prices have come off, and so there's been this temptation in people to say, well, look, oil's down, commodity prices have come off, supply chains have fixed themselves. Therefore, inflation's nothing to worry about. Well, inflation's still raging at 7.1%. So, most people would say that maybe that is something to worry about. And what's happened is inflation is dynamic and it's noisy, and we've metamorphosized from an inflation shock that's as a result of the pandemic and the war into a self-sustaining inflationary cycle by virtue of a wage price cycle. And the way that works is employees, for the first time in decades, have got a bit of pricing power. They go to their employers and say, look, the price at the checkout is going through the roof. I need more money. You need to pay me more, or I'm going to leave and get a higher paying job. And so we're seeing average wage growth at about 6.5%. People who change jobs, I think their average wage growth is like 7.7%. So people are getting paid more to change jobs. And employers are looking at the job market and saying, well, look, heck, everyone's got a job. We're not going to have to eat these wage increases. We can just increase our prices because people can afford it because everyone's got a job.
This is like, I'm so glad you said it, because this is exactly because I own a large preschool. That's one of my businesses. Right. And it's like, they're able to go and get a fast food job for $16, $17 an hour. And so I'm like, well, I can't lose good people because they're making more money. So I'll just, and the logical business owner mindset is like, well, everybody has a job. There's no unemployment. So we can increase. Oh, Meg, I just like, you defined it. You hit it literally on the head. That's so crazy.
So this is a wage price spiral that we're in now. And this is how inflation becomes kind of self-fulfilling. And if you've got people earning on average 6.5% more each year, that increases their desire or their propensity to consume, to buy stuff, to do stuff, because people think in nominal terms. They don't think in real terms, post-inflation terms. This is a very well-known mental heuristic called money illusion. All right, you pay somebody more, that they're likely to spend more, even if inflation is higher than their wage increases. So 6.5% wage growth is no way is that consistent with 2% inflation.
That's right.
And so what the Fed is trying to engineer, and they've kind of telling us this now, is a recession. And Powell told us on Wednesday that their summary of economic projections is for unemployment to rise to 4.6% next year.
Gotcha. Okay. So I think the consensus is that they are actually trying to engineer a recession. See, I didn't know that. I thought they're just trying to get inflation down, but really because of, the wage price spiral, like they almost have to engineer a recession in order to get this thing under control. Is that your line of thinking?
Yeah, and I think the argument behind that, which I think has got some justification, is that a recession, the Fed has got the tools to kind of ease a recession or help the economy out of recession. Whereas rampant inflation, if left unchecked, it's extremely hard to control, and that's
Right.
really more damaging long term. Yeah, I mean, recession it's uncomfortable and it's scary, and my heart goes out to the people who are directly impacted by losing their jobs. But we get over that. The economy will rebuild. It'll dig itself out of a hole. It always has. But if you've got rampant inflation, it leads to a very unpredictable economic situation.
Gotcha. Now, you're in Australia now, you live in Singapore. Like, is it the same there, or when you trade and when you do what you do, is it primarily US markets, US equities?
I focus entirely on US markets.
Okay. So you know exactly
Yeah.
what's going on here in the United
Yeah,
States.
it's the only market I trade now. I mean, I used to trade the Aussie market and the US market, and I gave that up about 4 years ago
Hmm,
because the US market has by far the most abundant opportunity set. They're the deepest, most liquid markets. And trading the Aussie market, it just wasn't worth the stress of trading an additional time zone because the opportunity set there was just wasn't worth the effort.
yeah. So there's obviously a lot of ways to participate in the markets. Your expertise is with options. My
Yeah.
first question is before I have you explain what options are to all of the layman people and layman terms, why do you like options more than anything else?
I like options. The number one reason I like options is because they are the finance industry's greatest risk management tool. Now,
Mm,
you've got a form of built-in risk management if you're trading options. If you're trading them the way I teach people to trade them anyway, it's if you follow my risk management rules, it's basically impossible to blow up your account.
hmm,
Um, that's not to say you won't have losing trades. You absolutely will,
of course.
but you'll never blow your account up. The other reason I like options is they give the small guy the opportunity to grow their account quickly. Um, Putting your money in a portfolio of ETFs or a long-term stock portfolio, it's fine if you're already wealthy. But if you've
Right.
only got $5,000 or $10,000 to invest, the returns that you can make, you know, they're not going to be life-changing, and unless you're very young. Okay, there's this idea of
Right.
earning 10% per annum and compounding it. It's great if you've got 30 or 40 years for that compounding effect to work its magic.
Yep.
But if you're in your 40s or 50s and you haven't got a big retirement nest egg saved up, it's just not going to get you there. The maths just doesn't work. You've got to be able to compound your gains more frequently.
Mm,
And options are the way to do that. The other thing is, even if you have got a decent nest egg saved up, you can take a small percentage of that and start trading options and see how you go. All right, and this is what some of my members do. They just start with, maybe they've got $100,000 portfolio. They'll just take 5,000 of that, start trading that with
hmm.
options, see
Which,
how they go. And
yeah.
what nearly always happens is they just start allocating more and more and more money to their options portfolio because it's doing really well. Whereas the other one's kind of sitting in the background going, yeah, that's kind of nice, but
That
not really
that
moving the needle.
Yeah, that's amazing. Well, I have to ask you this question actually before I ask you to explain options, because I literally laughed my ass off when I was listening to you in another interview explaining the definition between an investor and a trader. And the whole time I'm like, "Oh, I'm an investor. I don't trade." And then when you explain the definition, I was like, oh shit, I'm a trader.
Yeah, yeah, yeah.
You're like, if
Nearly
you're
everyone.
checking your account every single day and you're hoping that it goes up. I was like, oh crap. So please, if you don't mind, Simon, can you explain the definition, the difference, and why
Yeah,
most people that think they're investors like myself are actually traders, and why that can be damaging thinking that
yeah.
you're an investor when you're really a trader?
Absolutely. So an investor is somebody who invests, they understand a business deeply and they put money into that business to participate in the cash flows and the profits that will be spun off that business over the very long term. And they may never sell it, but they're certainly not worried about what the valuation is day to day. A
Mm,
trader is someone who buys a financial instrument with the thought or the plan that they'll be able to sell it at some point in the future at a higher price. All right. So anybody who buys a stock or a bond or anything with the idea that they're going to sell it in the future at a higher price is a trader. And it's not a function of time frame, it's a function of purpose that differentiates an investor
right.
from a trader. So it doesn't matter whether you're planning on holding that stock for 3 weeks, 3 months, or 3 years. If your plan is to sell it at a higher price, to me, you're a trader. If
Mm,
you're looking at your stock prices every day or every week, you're a trader. If you care about central bank announcements, you're a trader. If you care about quarterly earnings reports, you're a trader. And but most people will think, well, no, I'm not trading every day, or I'm not sitting in front of a screen all day. Therefore, I'm not a trader. I'm an investor. The problem with that is if you think you're an investor, but you don't plan like a trader, you can get really unstuck when things happen that don't go according to plan because
yeah.
you haven't got a robust risk management plan in place. What happens if your stock falls 10%? Oh, I'd buy more. What happens if it falls 20%? Oh, I'd definitely buy more. What happens if it falls 30%? Oh, that's a bargain. I'd buy even more at that point if you've still got some money left. What happens if it halves? Oh, well, then I'm going to sell because I'm not stupid. And this is the sort of
Yeah.
reaction people have.
Yeah.
Uh, and
So,
and
oh, I'm sorry. Go ahead. Go ahead.
if you go to a traditional wealth manager, they'll ask you these asinine risk profile questionnaires. What would you do if the value of your portfolio dropped 30%? Let me tell you, if you haven't lived through that, you've got no idea how you'll feel and what you'll do.
Right. That's
These
right.
are really tough questions.
Yeah. So, based on your definition, obviously, it's somebody that has a deep understanding of the business and wants to participate in the cash flow. So, by that definition, I mean, theoretically, it would make no sense to invest in any company as an investor that doesn't pay a dividend. Is that correct? Like, if it's because essentially the rest are just growth stocks. And
Well, I mean, you could argue that share buybacks are another way of, returning
I
capital
see.
to stockholders, which
I
inflates
see.
the price. I mean, it's a, that's a, I guess, a more nuanced conversation.
Got
Um,
it. Yeah, because I
yeah,
I mean, when I think of investor, the only person really that comes to mind is Warren Buffett. I mean, the
I
guy.
think that's fair. Yeah,
Yeah, I mean, I don't know of anyone else. I mean, all these hedge fund managers, Bill Ackman, all these guys, they're traders,
they're
and so it's.
traders. Yeah,
I just really think it was important to understand that definition because the thing that you said that is really powerful is there's nothing wrong with either one. It's just understanding which one you are and having a strategy. Because I think the worst thing is, like you said, be thinking you're an investor, but you have a trader mentality, which is the wrong philosophy, like
it's
entirely.
all about having a risk management plan for when things happen that were unexpected or unwanted.
Gotcha. So, is there a simple way to explain options to people?
There is.
Yay.
So options are not as, I mean, options can be frightfully complicated. And I mean, the reason I wrote my book, The Tao of Trading, is, why does the world need yet another book on options trading? There's already hundreds of them out there. And, I know that I've read a good many of them. But really, they're all boring and difficult. The sorts of books that you'd only finish if your boss made you read it, and they're difficult to get through. They're
Right.
difficult to understand. I thought the world needed a book on options trading that was both simple and engaging. And the number of people who've told me they've read my book in a weekend or even in one sitting, and it's a
Wow.
342-page book. It's not a booklet. Um,
Wow.
so I feel like I've ticked those boxes. But yeah,
Hmm.
it was to make options trading engaging and approachable for people and to demystify it, really. So just to give you a quick summary on what an option is, there are
Yeah.
only two kinds of options. There are call options and put options. And we buy call options if we think a stock price is going to go up. And
Yep.
you can just remember that call up, like call up a friend. And we buy put options when we think a stock price is going to go down. And you can just think put down, as in, put
I
down your
like that.
luggage.
I like that.
So only two kinds of options. You buy one when you think things are going up. You buy one when you think things are going down. I liken call options to, it's like a rental agreement. I say they're like the Airbnb of the finance industry, because they allow you to have really most of the benefits of owning a stock. You don't get dividends with options, but you
Right.
do get to participate in the price appreciation for a finite period of time. So it's a little bit like renting a property. You might rent a beach house in Malibu um, for 2 weeks.
Right.
You're only going to pay a fraction for that 2-week rental that you would have to pay if you were to buy the property. And it's the same with options. You can buy call options in Tesla, and it'll cost you a fraction what it would cost you to buy the stock. Now, the downside with this is you've only got them for they only exist for a finite period. It really is like a rental agreement. Your
Right.
two-week lease is up, you get kicked out of the house. Once your option expires, it disappears. It ceases to exist. So the upside of options is they cost a fraction of the amount that the underlying shares cost. The downside is they've got a limited lifespan. So if you're trading options, the other thing that you've got to do is have a way of identifying high probability moments in time to expose your money to risk. And really that's what my book and my course is all about. It's teaching people technical analysis, which is
Hmm.
the analysis of price, to identify those high probability moments in time.
I really love that. So I have to ask you, and maybe you use multiple, but like, is there one particular platform that you really like over all the others to buy and sell options?
Yeah, look, this isn't a recommendation, but I guess
Sure.
there are two brokerage platforms that I like and use primarily. They are Tastyworks and Thinkorswim.
Ah,
Think
yep. Not Robinhood. No, I'm kidding.
No, I've never used Robinhood.
I'm just kidding.
I,
Uh,
I've never had confetti shower my screen when I place an order.
that's so funny. Like it's literally they have mastered gamification of retail investing. Like that's
Yeah,
one
and
thing
I
that
I think that's dangerous. I think that's a slippery slope. This is a serious business. This isn't a game.
absolutely. Absolutely. So I want to ask you, so from, the outside looking in to somebody that does not understand any technical analysis, the markets look unbelievably unpredictable.
Yeah.
Even like there's some days when like an event will happen or Jerome Powell will say something and I'm like, "Oh yeah, like the market's going to tank tomorrow." And then it doesn't. It goes up and I'm like, "What the heck?"
And it
Like,
goes up bigly. Yeah.
yeah, and I'm like,
Yeah.
I could have never seen it just seems crazy, but based on the indicators that you pay attention to, you've been able to not only be right way more than you're wrong, but you've been able to help a lot of other people. Like, what do you pay attention to? Is it actual technical analysis, like
Yeah, it
reading
is.
the charts, the candlesticks? Like, is that what technical
That's
analysis mean?
yeah, that's definitely part of it. Candlesticks, looking at a few. We use a few simple indicators, common indicators. We just use them in a slightly uncommon way. There's
Mm,
nothing particularly difficult in it. All of the indicators that I use and teach in my book are available on any charting platform. The way I approach it, though, it's very visual and intuitive and colorful. In my course, I teach people how to look for what I call rainbow logic.
mm,
And when it lines up, you see these rainbows on your chart. You see the red, orange, yellow, green, blue, violet. And it becomes very intuitive because you look at a chart and within a split second you know whether you're seeing a strong trend or not. You said earlier that markets a lot of the time look incredibly random, and that's
yeah,
because most of the time they are. I would say a good 80% of the time, probably 85% of the time, a stock price movement does look random. It doesn't have strong predictability. But every now and then, you see a technical setup where a stock does become relatively more predictable.
Mm,
Now, when I say predictable, we're not making predictions. What we're doing is we are playing probabilities. All right. What we're saying
got
is
it.
when we see a setup like this, A is more likely to happen than B, but anything can happen, and it's always maintaining that probabilistic mindset. This is something that trips a lot of traders up, where there's this desire, this want to be right. Um,
Right.
if you only have to spend 5 minutes on Twitter to realize how important being right is to most people. With trading, you've just got to accept probabilities.
Yeah.
You've got to be open to the idea that we're not in a Newtonian deterministic world where if A happens, B will happen. B is only more likely to happen. But again, this is why risk management is so important, because whilst B is more likely to happen, anything can happen.
Yep.
But the
Yep.
setups do give us that probabilistic edge. And if you can win 60% of the time and your winners are twice the size of your losers, you can make a good living.
That's incredible. Yeah, it's poker's gambling to somebody that doesn't understand, the philosophy and the probabilities and this, the skills. So I wanted to ask you, I know a lot of people they follow because you jogged my memory when you said Twitter. They follow handles like Wall Street Bets and they're really trying to get involved in short squeezes. Do you ever participate in any of those? Like any of the short squeezes that happen? Like do you ever play probability or you just stay in your lane?
No, look, I do, but not because some anonymous guy on Twitter posted it. Yeah, I rely on my own my own techniques that I use and teach. So
Gotcha.
yeah, I mean, I had a bit of fun in GameStop last year.
Yeah,
It
that's
added a
awesome.
little bit to my annual return, but it's certainly not core to what I do.
Yeah, did you see that like that kid that killed it with Bed Bath and Beyond, that college student?
Oh yeah.
Oh my gosh, he made like 100 and something $1 million. It was just blew my mind. It was really crazy. But it's like I think stories like that that suck people into well, you know what? I'll just follow this group because whoever's leading the group must be doing the technical analysis. So he's doing all the work for me. So I'll just do what he does. And I think a lot of people really fall into that trap. I think it's really powerful that you teach fundamentals to people.
Well, there's also that story that that teenage kid who ended his own life because he ended up in a massive margin call
Yep. Yep.
with a Robin Hood account, I believe. And yeah,
Yep.
so
That's
that for every winner, there's probably a dozen losers.
Yeah, absolutely. So you have people from all walks of life come to you and you teach them. Because I know a lot of the listeners that are listening to this are going to be very interested in your book and also, your courses. And the reason I say that is because, I'll just be honest with you, Simon. Like, it's not a skill that I like pride myself on, but it's really easy interviewing thousands of people for a podcast to know when someone is really smart, they know what they're talking about, and they're very genuine, and they're doing it from a place of wanting to give back. And so, like, I mean, I've got that vibe the minute that we jumped on here. And so I know a lot of people are going to want to like gravitate toward what you put out there. And so, to just speak to that, like to the people listening, what are some of like the mindset reality checks that you give people when they come to you? Cause, it's hard to avoid the massive microwave mentality that people have, right? Like instant rice, instant oatmeal. I want
Yeah,
instant success like tomorrow.
yeah.
What are some of the things that you tell people up front before they get in this game?
So trading is it's a skill that you need to develop. All right,
Okay.
there is no kind of magic indicator system where whenever the green light pops on your screen, you buy and you're going to win every time. That's not what trading's all about. It's like golf. It's like swimming. It's
Yeah.
experiential. You've got to hit a few hundred balls. You got to get your feet wet. You've got to practice. It's not something that is going to make you an overnight success,
Yep.
but it is something that once you've grooved your swing, to use that golf analogy, what once seemed kind of awkward and difficult becomes almost like second nature. And if you follow your process, and if you lose your attachment to outcomes for a minute and just really dedicate yourself to following the process, following the risk management guidelines, um, success, it's going to be very hard for success to elude you over the long term. It may take some patience. Yeah, you're going to have some losing trades. I'll tell you that up front. Losing trades are your cost of doing business. They are an operating
exactly
expense.
Right. I love that analogy. I really like that.
So people get very emotional about losing trades. Oh, I'm stupid. Oh, I'm not good at this. A losing trade, it's like buying paper for the photocopier in your office. It's now, like any good business, we want to minimize our operating expenses, but we accept them and we don't get emotional about them. And really, that's how I approach them with trading, and how I encourage people to approach them.
Got it. Do you have an opinion on bots? Do you think they're just stupid?
Well, I mean, the $97 bots you can buy on the internet, yeah, they're just stupid. I mean, if you're talking about the algos that JP Morgan and Bridgewater and firms like this use, no, they're not stupid at all.
Yeah.
But they're playing a very different game from what we play. And one question I do get asked often is, hasn't trading these days just been dominated by, the bots and the algos? That's a good question.
Yeah.
The answer is yes and no. I mean, if you're trying to do high frequency trading, yeah, forget about it, right? Unless you've got, unless you've sunk hundreds of millions of dollars into an algo and you've got a supercomputer co-located at an exchange,
Right.
that's not a game you want to get involved in. And look, algorithms are also widely used by managed futures funds, CTAs, commodity trading advisors, that they use algorithmic entry and exit rules, but they're trading very, very liquid futures markets, and they often have much longer holding periods. What we do, where we're looking at single stocks that we can hold from anything from 2 or 3 days to 2 or 3 weeks, it's a really good playground for the retail trader, because it's an area that isn't dominated by bots. It doesn't have the liquidity for the big boys. One of the great advantages of being a retail trader is you can enter or exit a position with a single mouse click.
Yep.
The big guys can't do that. It can take them weeks or months to enter or exit a position.
Yep. I had a mentor that explained that exact same analogy with just all business in general. Cause one of the things I used to ask him, I'm like, I create a product or I do this with my small business, but these big boys like Johnson and Johnson or Kellogg's, they have the money to throw at it. And his analogy was, yeah, but you can pivot on a dime as a small business. You can make adjustments in a day. They have to, it takes a year, 2 years sometimes. They have to run it through a board and they have to do like you can make small adjustments, and that's your advantage. And I think that's what you're saying is similar. It's just you have the ability to play in that world because you're a little guy. I mean, you can make changes quickly. Mouse click.
You can. Yeah, I can go from being long to short in 2 seconds. I don't have to answer to an investment committee. I don't have to explain myself to unit holders or other investors or limited partners. It's all on me.
Absolutely. So you have a lot of data because you have a lot of students, and I know that a lot of listeners are going to want to know this. Just from all the data that you have with your students, like what does a typical student of yours like get started with? Like, how much do they bring to the table? Is it a few hundred, a few thousand? Is it a wide range? But like, if we were to take like a medium, what would you say is typical, just so people could wrap their mind around it?
I would say $5,000. Now I have got students who started with less. I've got one young lady who started with $800, and she doubled that in her first 4 weeks, and she's gone on and she's doing really well. I think $800 is probably on the small side, to be honest with you. $5,000 it's enough money to have a few positions on, to get a little bit of diversity in your trading portfolio, and also to weather a couple of losses. I find that beginner's luck is a rare thing in trading. It's almost as if the trading gods really want to test your mettle. They're going to throw a couple of losing trades at you and see if you're really serious about this or not.
That's so reasonable. Like $5,000 is like today is very reasonable to learn. I mean, when college is 60,000 a year and you don't even
Right.
learn the real thing for like 2-3 years, and if you even learn any hands-on experience, I mean, I think $5,000 is a very, very low cost to learn any kind of a lesson whatsoever. So like that's
And
very reasonable. I would have, yeah,
that's not a cost. That's not a cost. That's just your table stakes, right?
that's
So
exactly right.
yeah,
I would have thought it would be a lot higher. I honestly, I thought you were going to say like 25 or 50,000. So I was very, very
yeah. I
surprised.
mean, I've got members from all walks of life. You know, I've
Yep.
got finance industry professionals in my programs. We've got engineers, we've got school teachers, we've got yoga teachers. And we've got people from all over the world.
So my final question, well, two questions. My final question about this to you is, let's remove all of the education part of it. What's a typical day like for a full-time options trader?
uh, so um, I get up in the morning and I play with my young son and do the school run, come home, go to the gym, maybe do a bit of reading, maybe check my positions, do some analysis, and then go out to lunch, catch up with some friends, maybe go for a swim. So this is if we're at home and we're not traveling.
Yeah.
Go and pick the kids up from school, prepare dinner. Yeah.
That sounds great.
Market opens and spend half an hour in front of the screen. But the way I trade and the way I teach people to trade, it's not about sitting in front of your screen all day. It's about doing your analysis when the market is closed, which means you really only have to be active in the market for a fairly short amount of time, maybe half an hour or so. But literally,
Wow.
I think with the way we've structured the scans that we use, people can get their trading done on average in about half an hour a day. Now, there are some days where it might take you an hour. There'll be other days where it takes you 5 minutes. But I think on average, half an hour a day is about it.
That's incredible. I love that. I really do. So my final question is, man, people need to know, where do they get your book? What is out there? Do you have a Facebook group, a community? Like, what are the next steps for anyone that's just like, dude, Simon, I'm excited. Like, what's next? Where can they follow
Yeah, sure.
you? Where can they get your book, and where can they join your community?
So my book is called The Tao of Trading. That's TAOOFTRADING. It's available on Amazon.
Perfect.
I think it's a Kindle downloads $8.99. Be the best $9 you ever spent.
For 340 something pages?
Yeah.
That's
That's in
it?
the printed version. Yeah.
Done.
So my website is taofoftrading.com. So
Okay.
TAOOFTRADING.com. They can follow me on Twitter. My handle is Simon_Ree, REE. I'm also on LinkedIn at Simon Ree. And what I'd like to do, John, is offer your listeners a couple of special offers. If they head over to taofoftrading.com/mentor, they'll be able to download the first chapter of my book for free. They'll be able to watch an online masterclass I held a month or so ago, and get some discounts on some of our programs.
Well, thank you for offering that. I was not expecting that. Guys, listen, if you're listening to this, it's almost the new year. Like, what better gift can you get for yourself than investing in yourself? And so, like, I really, really appreciate that. Simon, this was great, man. I really, really like you do have a gift of teaching. Like, you keep it simple. You're very good at dumbing a complicated concept down to like a very simple like way of explaining it. So I really, really like that. I just appreciate your time. And I can't wait to release this episode, man. Hopefully I can have you back on here, in the future as well.
No, it's been an absolute pleasure, John. You've been an awesome host, and yeah, I'd love to come back in the future.
Awesome. Thank you.